Wait guys, if you're buying a house of 400k, 20% of 400k is how much? 80k. Who has 80k in their bank sitting not doing anything? We have to do the same damn thing all over again. Like, why? The real estate market right now is very hot. Hi guys, welcome to my channel. It's Kosi here again. How are you? Thank you for tuning in today to hear what I have to say. If you're a new subscriber, hey, welcome to the community. So good to have you. Thank you for deciding to join us. On this channel, I do my best to document my experiences as a newcomer in Canada, one video at a time. Hopefully you might learn a thing or two. And if you're an OG, a returning subscriber, hey, what's up, what do you do? I hope you've been keeping safe since my last upload, which has been quite a while. If you follow me on IG, you see that I just had a baby, and I've been trying to adjust to this new life, and so much adulting has been happening in my life basically. But here I am, I showed up today, yay! Today's video is a continuation of the series Newcomer in Canada, and today's video is highly requested. I'll be talking to you guys about the process my husband and I went through when we bought our first house here in Canada. And for reference, we are actually in Calgary, Alberta. I know that, you know, different provinces might have different regulations when it comes to real estate. So everything I'm going to be talking to you about is based on the Calgary, Alberta market. So are you excited? Then don't go anywhere and we'll get into the video in a bit. I'm not a real estate agent. I'm not, you know, I might use very layman terms to explain most of these things to you. The truth is that buying a house is actually pretty straightforward as a newcomer in Canada. However, the process is very tedious. Financially, psychologically, emotionally, it affects everything. Number one, having full-time employment. Once you have full-time employment, you know, you're already a step towards, you know, getting your first house. And the reason I say full-time employment is because many lenders wouldn't be comfortable lending you, you know, mortgage if they see that your employment is not permanent, full-time. The second thing is your credit score. I've been saying this over and over again in my previous videos. If you haven't watched this video right here, now is the best time to save it so you can go back to it after this video. I talked to you guys about the strategies that you can use in ensuring that your credit report, your credit score makes sense from the very first day that you get, you know, into Canada. What you need to be conscious of, you know, in terms of your personal finance. Your credit report is also going to be reviewed before you get an approval for mortgage. And of course, your credit score, your credit reports have to be very good before a lender trusts you enough to lend you some money. And then the third thing is having your down payment. So in Calgary, Alberta, the minimum down payment that is expected when you're trying to buy a first home is 5%. So assuming the house you're looking at costs 400,000 Canadian dollars, the lender expects that you should have 0.05 times 400. Yeah, so the lender expects that you have 20,000 in cash before they approve your mortgage. So for the sake of those who might not really understand what mortgage is actually the money that the lender, which is usually a bank, gives to you to pay for the cost of the house that you're trying to buy. And then they create a payment plan where you begin to pay back the lender, probably monthly or twice a month, depending on what the agreement is. You pay back your lender within a period of time with some interest. So that's pretty much a summary of what mortgage is. What next do you need to do? What we learned is that you can multiply your annual income times 5. It gives you an average idea of what your mortgage approval is going to be. So for instance, you earn 50,000 Canadian dollars every year. When you multiply that by 5, it gives you 250,000 Canadian dollars. But if you have maybe student loan, car loan, or some other line of credit, that would also impact how much you finally would get approved for. So if you're earning 50,000 and you're going to be, and times 5 gives you 250,000. If you have like a 10k or 20k car loan or student loan, you won't be able to get the max, which is 250, because the debt that you owe will be subtracted from that before you know your final approval. Makes sense? So you need to have an idea of what that amount would be. Based on the amount, then you go into the market and start searching. If you live with your spouse and your spouse earns another 50,000, so together the entire household income is 100,000 Canadian dollars multiplied by 5. It means that what you would qualify for would be about 500,000 Canadian dollars, assuming you don't already have debt. Let's go to the market. Depending on your preference, so people prefer to go for brand new homes that are even still under construction, and so people are open to buying homes of someone else who is trying to sell their home. So it really depends on you. If you have a preference for a new community, chances are that you'll find a new house in a new community. However, if you're open to finding a home in any community, maybe you have a specific community in mind that is not necessarily a new community, chances are that you would have to buy off someone who is trying to sell his or her home. So based on that, you need to make a list of your negotiables and your non-negotiables in terms of what you're looking for in a house, because at the end of the day, something has to give. What you're expecting might not necessarily be what's available in the market. So I think it's important to mention at this point that if you are pressed for time, if you don't have enough time between when you're ready to buy and when you want to move into your home, it might make sense to actually work with a realtor. Or if you're someone who is still new to Canada, you don't have an idea of what the communities in Canada are and what the best communities to actually buy a home from, or you're just confused, really, that's where a realtor comes in. So a realtor comes in to advise you based on what's available in the market. When you use a realtor, there are chances that the price of the house goes up, and the reason is simple. The seller of the home usually factor in the realtor's service charge into the amount that they're selling the house for. The service charge for the realtor doesn't come out of your pocket. It's between the realtor and the seller to decide what he or she is going to get paid. So if you're still watching this video up to this point, it means that this video is making sense. Have you subscribed? Hit the subscribe button right now and join the communities. Now that you have a realtor, you have a list, it's time to now start doing all the legwork. Like almost every weekend, we were always on the road going to different communities, because the realtor will keep sending you, hey, this property fits what you're looking for. Are you interested in viewing this property? So you guys just have to do the legwork and go and inspect, and if it's something that you like, what do you do next? So when you're buying your first house, chances are that's not going to be the last home you live in. So you need to worry about how easy is it going to be to resell the home when you're ready to buy another home after a period of time. So things that people often look out for when they want to consider buying your home or renting from you are things like proximity to transportation. Is there a bus stop? Is the train station close by? Is there a school for the kids? Many people that will be interested in buying from you or renting from you are usually going to be people that have families. So we are advised to make sure that the house that we finally bought had at least 3 bedrooms, because that's the ideal size of a house that people who have families will be looking for. We are also asked to look out for backyard, so that if the person who is buying from us or renting from us has kids, they can have nice space to play outside during the warm weather like summer. We're also asked to worry about garages, because homes that have garages are of better value to people who are buying or renting. We are also asked to worry about home office, given the fact that many people are actually working from home these days. Many people want to make sure that the houses that they are buying or they are renting is suitable to work from when they are working from home. So you're getting this information for free from me. Now, when you finally find what you're looking for and you're ready to buy, you need to act fast. And I'm saying that because there were some homes that we looked at and we're still trying to think about it, sleep on it, and by the time we came back the next day, it had gone up by $15,000. Like, no joke. That's why I said the market right now is crazy. So if you found what you're looking for and it meets all your criteria, you have to pay down payments to make sure that the seller takes the home off the market at that point. Usually many of these homes would require like a 1K down down payments to just, you know, get the home off the market and reserve it for you. Some of them might require 5k down payment, and they expect you to make that payment in check, which is usually refundable if you come back after a period of time and you change your mind. So what happens is that when you found what you're looking for, make that down payment of 1k or 5k to secure it while you're thinking about it. So you're usually given a grace period of about 5 to 7 days, I think, to come back to them and say, hey, we really want this, and then this is our pre-approval. So speaking of pre-approval, that's the next step after you found what you're looking for. Now this is where a mortgage broker comes in. We did not know about mortgage broker and their services before until we got to this point, and the reason it's important to use a mortgage broker is that if you don't have a mortgage broker, number one, you might not have access to the best mortgage interest rates out there. So your mortgage broker is the intermediary between you and the lender. So based on how much you qualify for, the mortgage broker goes to the market and finds you the best interest rate from the best lender given your situation. When I say situation, it's a little harder for newcomers in Canada to get approval for mortgage, and I'll explain the reason in a bit. I mean, you can decide to do all of this legwork by yourself, but the downside to that is that for every lender you approach, they're going to run your credit. And like I mentioned in my credit score video, every time they run your credit, they do a hard check, and hard check actually affects your credit score negatively. So you don't want everyone that you're reaching out to keep pulling, you know, your credit reports and negatively affecting your score. That's why you need to use a mortgage broker. So a mortgage broker takes all your credentials and run your credit score once, and based on what he or she comes up with, he then goes on your behalf to different lenders. When you get interest rate from different lenders, there is either the fixed interest rate or variable interest rates, and as the name implies, fixed interest rate, you know, is going to be fixed for, I think, for a period of 5 years. You keep paying that amount every month, but the variable is oftentimes a lot cheaper than the fixed. But then again, as the name implies, you don't know when it's going to change. Things can switch up on you at any time, so your broker is going to be advising you on all of that. And then again, like the realtor, you don't have to pay your broker out of pocket. The lender is the one who is responsible for sorting the service, you know, fee or service charge that your broker is going to be charging. This video is packed. See information I'm giving you guys. So yeah, that's why it's important to use a broker. They will be able to advise you on what's possible. So now that you've reached out to your broker, what do you need to do? So based on when you pay your down payment of 1k or 5k, they're going to give you something that you take to the bank that has all the details of the property and how much it costs. So the broker is going to be using that information to get your approval. For your broker to get your approval, he or she is going to ask you for a ton of documents that are actually mind-blowing. Employment verification, all your debt, your bank statement, your proof of residency in Canada, like a bunch of documents. It was so overwhelming. When we think we are done, she's bringing something else. So it was a crazy period, and what made me upset is that even after doing all of this, when it was time for possession, we had to do the same damn thing all over again. Like, why? After you provide all your information to your broker, she will then come back to you with something called a pre-approval from the best, you know, deal that she gets from all the lenders that he or she reaches out to. So that's what you would take to the seller of the home, and then the seller of the home would do something we call waive condition. So when the waive condition, it means that that home is actually going to be yours eventually. Yay! So yeah, one step closer to finally getting your first home. You can actually move in another 1 to 2 weeks, or if the house is still under construction, whenever the date for possession comes, your seller would advise you, and then you walk towards moving into your first home. Now, a few things that you need to bear in mind is that during the period of pre-approval up to the period of possession, you need to be very careful with your spendings. So chances are that you're going to probably be pulling funds from different sources. Now, if you're going to be doing that, you need to bear in mind that at the point of possession, when your paperwork has to be done all over again, the lender has to see proof of where this money is coming from. I guess the idea behind that is just to prevent fraud. So they need to see where the money is coming from. The money was a gift. They need to see, you know, who had the money before the person gifted you, how long was it in his or her account. So these are things that you want to bear in mind. Probably the best thing to do is, before you even start conversations about that, make sure that you start making efforts to tidy up your bank account. Free information from me to you. If you are pulling your down payment from different sources, make sure it's sitting in your account for 90 days, and during those 90 days, I beg you, don't touch it. Don't add any money to it. Don't bring out any money from it. Just leave it sitting there. Exact figure that you need, leave it sitting there. Do not touch it. If you're buying the house from someone who has lived in the house before, there is mandatory inspection that has to happen. A holistic inspection of the house, from the blinds to the plumbing to electricity to heating, to make sure that the house is in good condition before you finally move in. You have to pay a lawyer to take care of all the paperwork, to the transfer of ownership, all of that, signing, all of the legal stuff that goes into buying a new home. You have to pay the lawyer, of course, coming from your pocket as well. And many of these lawyers charge an average of 1K to about 1.8, depending on the level of the lawyer. If you're unable to make a 20% down payment and you pay less than 20%, there's something that you also have to pay, which is called your down payment insurance. The second thing that you have to pay for is your property tax. So depending on the location of the house, depending on the kind of house, you have to pay property tax, and it's usually around 2K, 2.5 per year. So that will be spread across, you know, the month of the years. This pretty much brings me to the end of today's video. I'm willing to continue the conversation in the comment section below, so please leave me your comment in it, and let's talk about, you know, anything that I may have missed. Anyway, I hope you enjoyed my video. If you did, do not forget to thumbs up, like the video, do not forget to share, because there is love in sharing, and do not forget to subscribe because it's free. And before you leave, please check out my other videos on my experiences as a newcomer in Canada, because you might also find them helpful. Till my next video, take care of yourself, stay safe, and always remember to be kind. Goodbye.